Friends, let's now discuss how to use cash flow statement for value maximization, strategy formulation, and implementation. As in the beginning, we have discussed that there are three financial statements that we need to deal with as finance professionals, as independent director, as nominee director, or on the board of a company in any other capacity as a whole time director, non executive director, so on and so forth. P&L is something that one needs to look at once in a month. Balance sheet is something that invariably companies will look at the end of the year. But cash flow is a statement that needs to be looked at not once in a year, not once 6 months, not once in 3 months, not once in a month, not once in a week, but every day, every day, every day. So that is number one, because to have the control on the business, we need to have the control on the cash flow of the business. So if we have the control on the cash flow of the business, then of course we can have the control on the entire business. Obviously, as a nominee director or as an independent director, we are not responsible for the day-to-day functioning, and therefore cash management is not our responsibility. But what is our responsibility is that the cash management of the company is efficient and it is effective. That means with our engagement, involvement with the board and with the top team of the organization, we need to guide them and ensure that the cash flow management of that business is very effective and efficient. So if we have to understand the cash flow effectiveness of the cash flow statement or efficiency of the cash flow statement or the efficiency of the cash flow management of a business, we firstly need to understand as to what are the types of cash flows in case of a business. So primarily there are three types of the cash flows of a business. Number one is the cash flow from operating activities. Number one is the cash flow from the operating activities. Number two is the cash flow from the investing activities. Investing activities. And number three is the cash flow from the financing activities. So, and remember, there is no fourth category. There is no fourth category. There are only three categories world over as far as the types of the cash flows are concerned. Types of the cash flows are concerned. So, how do we guide the entities whom we are, on whose board we are there as independent director? So, first of all, कैश फ्लो फ्रॉम दी ऑपरेटिंग एक्टिविटीज. ऑपरेटिंग एक्टिविटीज का मतलब क्या है? ऑपरेटिंग एक्टिविटीज, कैश फ्लो फ्रॉम दी ऑपरेटिंग एक्टिविटीज विल कंप्राइज ऑफ टू components. Component number one, cash flow from the profit, right? So the profit that the business will earn, that is one part of the cash flow from the operating activities. And number two is change in working capital. सो अगर आपकी, जैसा हमने पहले डिस्कस किया, इफ द वर्किंग कैपिटल ऑफ अ कंपनी इज रिड्यूसिंग, दैट मीन्स इट इज कैश इनफ्लो फॉर दैट बिजनेस. एंड इफ द कैश वर्किंग कैपिटल ऑफ अ बिजनेस इज इंक्रीजिंग, दैट मीन्स इट इज अ कैश आउटफ्लो फॉर दैट बिजनेस. सो दीज आर द टू कंपोनेंट्स ऑफ द कैश फ्लो फ्रॉम द ऑपरेटिंग एक्टिविटीज. एंड इसका मतलब क्या है? इसका मतलब सिंपल है. कैश फ्लो फ्रॉम द ऑपरेटिंग एक्टिविटीज का मतलब क्या है? कैश फ्लो फ्रॉम दी ऑपरेटिंग एक्टिविटीज का मतलब है कैश दैट इज गेटिंग जनरेटेड फ्रॉम दी ऑपरेशंस ऑफ द कंपनी. ऑपरेशंस ऑफ द कंपनी. हाउ शुड इट बी? इट शुड बी एज हाई एज पॉसिबल. सो द कैश फ्लो फ्रॉम द ऑपरेटिंग एक्टिविटीज ऑफ अ बिजनेस must be as high as possible, as high as possible, and over the years it must be increasing year after year. What is the cash flow from the investing activities? Cash flow from the investing activities का मतलब है, as a business we make investment in different assets, all kinds of assets. We make investment in plant and machinery, building, we purchase companies, we sell companies, we acquire companies, we invest our money into shares, debentures. So all that is the cash flow from the investing activities. So how should be the cash flow from the investing activities? So the cash flow from the investing activities, should it be positive or should it be negative? Now it will depend on the economic condition of the country or of the globe. क्या मतलब है? मतलब ये है, if economy of the country is doing well, that means the cash flow from the investing activities must be negative. Why negative? Because economy is doing well, so the company must make more investment. Company should do more expansion, diversification, modernization. Why? Because economy is doing good. So there's a good demand for the products of the company. So the company must encash and monetize and capitalize that opportunity. So the during the boom times, the cash flow from the investing activities must be negative. That means there must be more cash outflow from the business. During the depressionary or recessionary times, either it can be neutral or it can be negative. It must be neutral if company's EBITDA is still intact. It must be negative if company's EBITDA is shrinking. If company's EBITDA is shrinking, that means company need more cash. And if the company need more cash, where will it come from? It will come from the disposal of some of the assets which may not be useful in going future, or which may be lying idle or may not have application in future. So this is how the cash flow from the investing activities should be. How should be the cash flow from the financing activities? So obviously, the cash flow from the financing activities must bridge the gap. What gap? So let's say, for example, if you are investing 1000 crore, so your outflow on account of investing is 1000 crore. Your cash flow from the operating activities is 300 crore. So the difference, investment is, you are making investment of 1000 crore, you are generating 300 crore from your cash flow operating activities. So the difference 700 crore will come from where? It will come from your investing activities. That is your, it will come from your financing activities. Again, depending on the situation, sometimes you may raise money also, where you will raise money in this case, but sometimes you may even pay back also. You may buy back your own shares because you have surplus money lying with you. There are no other application for those funds, so you might as well pay that cash instead of sitting the cash and not earning anything. So this is one aspect of the cash flow management, and this is how the cash flow management should be done. So let me, Geeta ji, once again open it for everybody in case there is any question, and then I'll go to the next one.